Dear student, Assalamu alaikum. I hope all of you are fine by the grace of Almighty Allah. Dear student, I am Muhammad Shahjahan, Assistant Professor, Department of Accounting, Milestone College, Uttara, Dhaka.
Dear student, today we will discuss chapter 6. This is journal and this is the first lecture of journal. And in this lecture we will discuss MCQ from this chapter. Dear student, at the end of this lecture you will be able to know about important short questions from this chapter. Dear student, you know that in the exam 30% from MCQ. So earlier we have discussed CQ portion of this chapter. This is the first lecture for our MCQ. Today I will discuss some MCQ question from this chapter. Dear student, let's come to our class. Dear student, primary books of accounting. Dear student, which one is called primary books of accounting? All of you know that it is journal. Dear student, if you can remember, earlier I have told you also, journal is the primary books of account. In this book, if there is any transaction occur, primarily, preliminarily, we record this transaction in journal. That's why, dear student, it is called primary books. So the question is that what is primary books? Dear student, answer will be journal. Transaction written primarily in journal. The subsidiary book for preparing ledger is journal. That means subsidiary means, dear student, you know, optional. That means for doing ledger, you know that ledger is final books of account. It is permanent books of account. In ledger, we record all of the transaction by analyzing debit and credit. So that is permanent books. In permanent books, we record with the help of journal. That means in ledger we record with the help of journal. It is not compulsory to prepare journal. Dear student, we know journal is not compulsory math. We need to do ledger compulsorily. Journal is subsidiary for ledger. That means journal helps to prepare ledger. The transaction recorded in journal chronologically according to its occurrence. That means today's transaction I have to record today. Tomorrow's transaction I have to record tomorrow. We cannot write first tomorrow's transaction then today's transaction. That means according to its occurrence of time, we have to record the transaction. Dear student, the detail of every transaction can be known from journal, because in journal we have to give an explanation for transaction. That's why detailed information we can know from journal. It is not possible with the help of ledger. In ledger we will get the final answer. Dear student, in any detail of future transaction can be known from journal. That means future transaction details also you can know from journal. The number of column in journal is 5. There are 5 column in journal. Dear student, at the time of doing math of journal, we have to draw a column of 5. First column, you know that in first column we record date, then particular or related accounts, then LF, ledger folio, then debit taka, then credit taka. These are the 5 columns of journal. Dear student, journal is mainly two types. Journal is mainly two types. Dear student, how many types of journal? Two types of journal, general journal and special journal. Dear student, and these special types of journal again 6 types. You know these types, I hope. Dear student, 6 types of special journal: purchase journal, sales journal, purchase return, sales return, cash receipt, cash payment. These are the 6 special types of journal: purchase journal, sales journal, purchase return, sales return, cash receipt and cash payment journal. There are another types of journal, that is journal proper. Dear student, journal proper we can divide it into 4 parts. Journal proper, that 4 types, it is 4 parts. That means there are 4 parts of journal proper, and these 4 parts what we have record? We record rectification of journal, we record adjusted journal, we record closing journal, we record opening journal. That means in journal proper we record rectification journal. That means if we made any types of mistake, that for that mistake we have to give rectification. That rectification journal is for journal proper. adjusting journal. At the end of the year, we have to adjust some transaction, that is adjusting journal. At the end of the year, we have to give some closing entries, that is closing journal. And at the beginning of each year, we have to give some journal from last year, that is opening journal. These are the four parts of a journal paper. And journal means, dear student, analyzing debit and credit of transaction. Dear student, you know that under double entry system, in every transaction there are two parties. One party will receive the benefit and the other party will give the benefit. So receiver of the benefit will be debited and giver of the benefit will be credited. This is called journal. That means from each transaction we have to find out the parties, and one party will be debit and another party will be credit. This is journal. Dear student, the transactions which are not written in journal are or any other subsidiary book, those are written in journal proper. That means what is journal proper? The transactions which are not written in journal or any other subsidiary book. That means purchase journal, sales journal, purchase return, sales return. If any transaction is missed from that journal, then we have to record it in journal proper. Dear student, generally purchase journal includes how many columns? 6 column. In purchase journal we have 6 column, and in sales journal we have 5 column. Dear student, in journal proper we record, earlier I have discussed, rectification journal, adjusting journal, closing journal and opening journal. In purchase journal we record all kinds of purchase on credit. Dear student, be careful. Purchase journal, all types of, not purchase, all types of credit purchase, all types of credit purchase, all types of purchase will not recorded in purchase journal, all types of credit purchase will be recorded in purchase journal. In the same way, in sales journal we record all types of credit sales, not all sales. Debit note is prepared by purchaser, that means who purchased the goods, at the time of returning their goods he prepare a note, that is debit note. And credit note is prepared by seller or sales manager, that means who sold the goods, by receiving return goods he write a note that I have received this and these goods, that's why he prepare a note, that is credit note. With the help of debit note we prepare purchase return journal. Dear student, with the help of debit note we prepare purchase return journal, and with the help of credit note we prepare sales return journal. Dear student, journal is primary book, subsidiary book and daily book, all are correct. Dear student, journal is primary book, subsidiary book and daily book. By which book it is possible to know the reason of all the transaction? From journal. We can from the journal we can find the reasons of all types of transaction. In the sales journal, credit sales is recorded. What will be the credit if goods withdrawn from the business? Dear student, very important question. What will be credit if goods withdrawn from business? If owner has taken goods from the business, then purchase account will be credited. Purchase account will be credited. If owner paid salary by his own money, then capital account will be credited. Then capital account will be credited. If salary paid by owner, capital account will be credited. For credit purchase, if there is no name, then creditor account or accounts payable account will be credited. At the time of credit purchase account debit, but instead of that, if we would like to write in traditional method, then creditor account. If we would like to write modern method, it is accounts payable account, same synonyms. For credit sales, if there is no name is given, then it will be credited. Then no name, then what will be credited? What will be credited? So for sales account will be credited. What will be debited? What will be debited, not credited. What will be debited? It is account receivable or debtor. For credit sales, if there is no name is mentioned, then debtor account or account receivable account debited. If owners invested money in the business, then capital account will be credited. If owner invested money in the business, then capital account will be credited. What is the mean by the word jar? Jar means day. Dear student, jar means day. The word journal comes from French word. Journal comes from French word. Who made debit note? Purchaser made debit note. Who made credit note? Seller made the credit note. Good purchase in 10% discount. What will be the purchase price if the list price is 80,000? That means in the shop it is 80,000 the price, and the shopkeeper, the seller allow you 10% discount. So we have to subtract 10%. It is 800. Then the value is 7,200. That means 10% we have to subtract. He offer us 10% discount. If any asset is sold, then asset account will be credited. Dear student, now some homework. You will do this type journal